Hello, it is Thursday the 19th of September. It's been a pretty okay week so far. We have survived a big full moon, we have survived a lunar eclipse, and we have survived the Fed cutting rates by 50 basis points and surprising the market. So for the first time in 4 years, we are now back in a dovish cutting cycle. And that should be once we get past the volatility, and as long as we don't end up with a recession or another carry trade unwind, it should be bullish for markets. We do have the Bank of Japan early tomorrow or tonight in Asian trading, or daytime if you're in Asia, and that potentially, could have the Fed having made a big move. Certainly if the Bank of Japan act tomorrow, that will be quite a surprise, and I think we could trigger a big loss of that support in dollar yen, which at the moment, if we look at it on the weekly here, we're holding and bouncing pretty nicely from, but a loss of this support could see another big unwind in stock indexes, and that dragged Bitcoin down last time. So whilst our chart looks pretty bullish, there are things that can upset the market. Let's talk about why I think we are pretty bullish. Ever since the correction began in March, all of these these moves are, I call them corrective because they've been really clear, obvious, three-wave moves lower, and these equal measured move points have been all bought up really nicely. And in so many markets, this August the 5th low on Monday, August the 5th, was a really good turning point for so many, not just in crypto assets, but so many other assets as well, and particularly in the dollar. So where do we go from here? So we've had this really nice bounce. The reason I've got this marked here around as resistance is if this is just another corrective move, and an equal measured move from the low on August the 5th. I'm going to measure from this low to high here like this and project it from this low. And the 61.8 fib, where this swing is 61.8 of the first swing, which is very common in corrections, is at 62,400. I didn't think it would stop there, but it's one of those levels that we kind of need to hold above if we're going to keep going, and then we get to look for as the first target our equal measured move from this low on August the 5th, which is up here at 68,400 next. Now, we're going to have a little bit of a wobble here potentially with this daily 200 moving average. You can see that when we bounced off the lows in the beginning of July, it was a little bit tricky until we got above it. When we bounced off the lows on the 5th of August, we had a really nasty 50% pullback before we could get above it, and it's been a little bit tricky. So potentially 64,000 is where we potentially could see a little bit of a pullback to retest this 62,400. And for me, being long, if we were to fall back and find resistance, in other words, if we were to get underneath this and hold underneath it, I would cut my longs and reduce my position, because I think there is a little bit of a risk then that this potentially is all corrective. But for now, I'm looking for a really strong move to at least the top of the channel. And if we break out, if this is going to be a wave 3 and we've begun wave 3 of 3, we should see really strong movement, and this should be just a wobble or a shallow wobble and then a break and continue higher. But this 68,400 level potentially is a Gartley pattern. Why is it a Gartley pattern? Let's tidy up. Apart from this equal measured move, let's hide these fib levels. Okay, from this whole corrective pattern then, so that we started in March, if I draw fib retrace levels from this high to low, in a Gartley pattern, you see a first swing to a 61.8 fib, and then you see a pullback, either a shallow one or a deep one, which we saw here, and then your second target is the 786. And the best Gartley patterns are equal measured moves. And you can see if we measure from this low that our equal measured move and our 786 fib line up clearly, carefully, very correctly at 68,500. So we can say then that we've broken out from this bullish flag pattern potentially above 68,500, but as long as we hold above 62,400, that's going to be our next target. So, you know, if I'm very clear about buying pullbacks in a trend, I like to see all my moving averages lined up bullish like we have here. On the hourly, really good support from this hourly 200. And I like to see very nice three-wave corrections, which we just saw here. And now we've got a lovely breakout. We're going to get very shortly, we're going to get to 5 waves up here from this low, from this breakout, 1, 2, 3, 4, 5. And then I would expect another 3-wave pullback before we continue higher. We've seen really strong moves this morning in stock indexes and a lot of markets. One thing I will say about the US trading session when that happens is that if you see a really strong move going into it, either we go sideways and pretty choppy price action, so we'll see a pullback on the open and then it will be a choppy sideways day, or quite often we see pullbacks on those days, so we need to be very careful. And I think that that's potentially what we're setting up here in the US Open. But what I would like to see is a shallow pullback holding this bottom of this wave 4. So this 62,400 level should be support. But we could, you know, in typical crypto, we could spike a little bit lower to this swing low. We could come back 50% of this big 5-wave swing, something like that, and then back above this 62,400. If we just see a nice 3-wave correction, I am looking for this to continue higher. But if we see more than that and that becomes resistance, I think I'm going to lighten up, because there is a little bit of a risk that we could see a bigger pullback, and this was just a little bit of a false breakout. So 62,400. Key support, watch out for trouble around 64,000. We will complete 5 waves up there, and it will be the daily 200 moving average. And we might have one of those kind of funky US trading sessions. Let's see. I mean, so I'm hoping we keep going and it's bullish, but you have to kind of be prepared that that's what's going on. Let's take a look at ETH now, because we've seen some really nice bullish moves in ETH finally. If let's look at regular candles here on the weekly and see where we are. For me, if we do the same from the August 5th low that we made, we had a really nice rally, 3-wave pullback, made a higher low. I'm looking for another swing higher here, and if we measure, we're underperforming it in ETH, but if we measure 2,600 as my first target, which is where we are 61.8 of this first swing, and the equal measured move takes us up to 2,900. That kind of fits in, because if I zoom out here and we measure our fibs all the way, fib retrace levels all the way back from the June 2022 low, we're bouncing from a 61.8 fib level. We can see it a bit clearer here on the weekly. So this, let's put it back, this 61.8 fib level, also very nice hold of that weekly 200 moving average. This is the golden ratio zone. You tend to, if you bounce from this 61.8 fib level, you tend to, you know, reach the 38.2, and usually in 3 waves, and that sets this up perfectly. So the way these line up with this fib pattern and the weekly moving averages and this 38.2 level, I think 2,860 to 2,900 is a pretty good level. And if we look left, it's also a really good support and resistance level. So in ETH, this gives us a really good first target, and it kind of lines up with, if we keep going up here, this is kind of where Bitcoin will be at the top of that channel as well. So that will be key resistance. And above it, yeah, I think we can say this correction over, and we'll see a bigger bounce here, 3,300, potentially next swing underway. So how are we trading this in ETH? Again, I think in this US trading session, we could see a little bit of a pullback here, and then we're looking for this to continue high. This 50% level, whenever you've got a big 50% level, so if we go back to the weekly, you can see from this low to high, this 50% level here in the middle, if we look left on the weekly, 2,500 is a little bit of a pivot level, support and resistance as well. And so if we go down to a 4-hour, we've got our 4-hour 200 moving average as well. So if you're trading short term in ETH, this kind of is going to be your first level. So again, we're going to look for this to have a nice little pullback and another swing higher. 2,400, above 2,400. Again, we're going to look for the daily 50 moving average and another bigger swing higher to 2,859. So far so good. If we can't break above this level in the middle, if the Bank of Japan surprise everyone again tomorrow and trigger another nasty sell-off, let's hope that doesn't happen. Yeah, we just have to wait and see how far we pull back and look for some support levels. You know, we have to say, when you look at this daily chart here, we would still kind of be in a bit of a nasty downtrend and sideways, and we could see a retest of these support level at 2,000, 2,100 if that happens. Okay, let's take a look at Solana. I'm afraid Solana's one of the ones that I'm not quite sure that the bottom is in, and let's talk about why. Well, the main reason is, I think if we zoom out, big picture here on the weekly chart in Solana, and I measure from this high to low, we've done one of those fib patterns, right? 786, and that would normally give me, like, I mean, 70% of the time this is what we do. We come back to the 38.2. At least 70%. It usually works more. And so potentially here we are stuck between these weekly moving averages. We have not, this is not quite such a clear bottom for me yet. We could go sideways in these, and I think there is a little bit of a risk of one more push lower down to this 100, 102 level in Solana. So I'm not in this one at the moment. It's very clearly corrective. And if we go from 2,200 to 100, that's a very nice, clear kind of 50% retrace, isn't it? From this high. If we go from the low in 2022 to this high, that would line up with a 50% retrace. So although we're looking pretty good, big picture for me in Solana, until we kind of break out of this pattern, and if it is a really nice pennant or a bullish pattern like this, if we break out the highs of this, because we haven't broken the lows, have we? Then I'm going to say I'm wrong, and we will see another big swing higher in this. This would then be 1, 2, 3, 4, 5 waves up, 3 waves back, and the next swing should be really powerful in Solana. But until we kind of get out of this sideways range of these moving averages on the weekly, more than 50% back of this, I've talked before about how 50% of really nasty bearish reversal or bearish thrust candles can be resistance. What do I mean by that? This was a really nasty bearish thrust candle, and you can see exactly 50% back of the open close of this candle was resistance. And in Solana, if we are looking at this, that 50% level from the open close of the weekly candle that we made the end of August gives us 143, and that, interestingly enough, is right where our weekly 20 moving average is. So I'm going to say we're going to the top of this pennant pattern in Solana above 143, but whilst we stay underneath 143, kind of the risk is that we're still in this kind of choppy, not quite going up yet. So by all means, nothing wrong with short-term trading, but 143 for me is going to be the really key level for a bottom in Solana, and until then I'm going to sit on the sidelines in this one. If we look at the daily, we're still underneath the daily 50 moving average. We're still in a bit of a nasty looking chop zone. I'd like to see a bottom here. We have made a bottom here before, but that's going to be my decision level, my bull bear line for Solana. Okay, let's talk about trade management, because one of the charts that I've been talking about is SUI. I bought SUI a few days ago. It's like a couple of weeks ago actually. And the main reason I bought it is we had this really strong move off the August 5th low in SUI, and then we made a textbook, lovely equal 3-wave measured move back to these daily moving averages. Then we made a nice little short-term bottoming pattern here, and back above this 20 moving average was a really nice indicator that we were first off. My first look when I was looking at this was if we did that right from here, my first target was the top of the channel. And then just like we looked at in other markets, we did a very nice little shallow 3-wave correction here, and then we broke out in SUI. So I'm feeling pretty nice and bullish about this one, particularly when I zoom out in SUI and I look at the move that we've made from the high in March. This, you know, this is like the Bitcoin correction on steroids, isn't it? Everything kind of topped in March. But when I look at this, you know, the one kind of danger level is if you measure from this low to the first high, if we measure from this August 5th low, first swing, we initially paused at this 61.8 level. This is where we had a little bit of shallow sideways at the daily 200 moving average, but we didn't reverse here. You know, it was just a shallow pullback and we kept going. But now we've reached the equal measured move levels. So just like at this 61.8 level, I'm going to watch and see what happens here. What I want to see is a nice little shallow pullback, nice little 3-wave correction, and we keep going. And then I'm going to look for 1.8 next in SUI. But this could turn into a bigger reversal, and it's possible that this 3-wave correction is complete. So how am I trading that? Well, first off, I look on lower time frames to see if we flip the hourly moving averages, which we're not. Everything is very nice and corrective at the moment. It's just a warning level for me at the moment. I don't want this to turn into a bearish reversal because I'm long. And if we do, then I will reduce my position down to something really small and go from there. One reason I kind of like this, one reason I kind of like this 1.8 level is because I think this was a big 3-wave correction in SUI, extended but choppy corrective. The most common retrace of a pattern like that is the 786 fib, and that 786 fib lines up exactly with this equal measured move here around 1.76 to 1.8. It's not quite exactly, my apologies. So this is 1.4, I'm watching, make sure that we keep going higher here, and this isn't just a squeezy higher break. And 1.8 is where I'm looking for if we can hold above 1.39. Now, if I take these measured moves away and look at these just as fib levels at the moment, you can see that we blasted through the tooth from this high. You can see that we blasted through the 236 fib level and then it became support. We stopped twice at this 38.2 fib level. I've got this the wrong way around, haven't I? Let's put it on the right way round. Okay. Okay, 1.8 is still our 786 fib, but here you can see that we this 236 fib was initially support and resistance. This 38.2 level, we paused twice at it, and we've blasted through this 50% level. So I'm looking for 1.32 to be support if we have a shallow pullback and keep going here and push through that equal measured move level in SUI. So that's how I'm looking at that one. There's quite a few other charts that are very similar patterns. One of them is, we've looked at before, is FTM. Now, let's tidy up my chart here and talk about why this is interesting. First off, this is another one. From the high in March, we made a textbook equal measured move correction. I really liked the inverted head and shoulders bottoming pattern we made here, and I was looking for us, you know, if we measure from this high to this low, this back test of this 61.8 level, which is at 0.55, was important for me. That's what says we're going higher, but here we are from this low potentially. So, you know, I like this as corrective when I'm looking for new highs, but potentially from this low here, we've just done an equal measured move the other way. By that I mean this. So if I measure from this low to this high, project it from here, here's our equal measured move level, and here's our 200-day moving average. I don't want this to turn into a reversal here. I think that this swing high and this bigger 61.8 level should be support at 0.55, and underneath 0.52, in other words, if we pull back underneath that and then keep going, I'm going to be bearish. So that would be bearish. That would mean, for me, that would confirm this as just a three-wave rally and not the bullish reversal. So a little bit of a warning here. I think we look good at the moment. In fact, like if we look at shorter time frames, it looks like we've pushed through this equal measured move level and it's going to be support. So what would be really bullish here, you know, would just be a nice little three-wave correction, and then we keep going. Happy days. So 0.8 would be next in FTM. If we can hold above 0.63 here. If we don't and we see a bigger pullback, I'm looking for 0.55 to be support. That's how I'm managing this. If this turns into a bearish reversal on lower time frames, hourly moving averages, if we were to, for example, if we were to lose this hourly 20 moving average, I think we see a bigger pullback here to 0.55, and I would take some profits. So another one that's been doing really well that I've been following and trading is SEI. Let's take a look at where we are with SEI, because for a lot of these we want to make sure that, you know, we seem to be, I can't find my chart, let's find it, here we go. Here we go. SEI. Now, here's the daily chart of SEI. So we've been in this really nasty downtrend. Every time we've bounced, we've kind of failed at these daily moving averages, particularly the daily 50 back and forward. Starting to see a bigger move here. Again, this from the low, I think it's just corrective, and what I'm looking for is a move back to these highs at 0.4. We're at 0.33 at the moment. And that would line up with an equal measure move. You can measure it simply like this, from this low to high here. If we can hold above these daily moving averages, we're going to do an equal measured move back to this swing high at 0.41. That, and then, you know, above that would be a bullish reversal. Remember, previous highs and lows, really tricky levels, and that was what would reverse the trend if you're looking at that in SEI. On these lower time frames, though, we're not going to get up here unless we can get back past this equal measured move level like this from this low, which I think is around here. This one has pushed above it now. Okay, holding above it. So as long as SEI holds above 0.32, I'm going to look for 0.36 next, and the 2.618 should be all the way up here, a little bit higher, 0.43, and back to these highs. Actually, there's the high. So this one doing pretty nicely. Is it still a big, you know, three-wave move at the moment? Yep, so far. But I think this one has more upside, and 0.44 is what I'm looking for next in SEI. Let's take a few more interesting charts. Let's take a look at Pendle. I like Pendle because, firstly, if we look at this on the weekly, looking for Pendle, that went for the first time, Pendle broke, we closed above the weekly 50 and we pulled back and found support for it, but I like it because of the fib pattern. So if I measure from the low in August 23 to the high that we made in April 24, we have bounced from a 786 fib level. This was this down here at 1.97, and you know, when you can close and hold above the 61.8, your target first target is the 38.2 in at least three waves. So this is my target level. We could have a wobble in the middle here. We've got pretty strong support and resistance at this 50% level when we back test it and these swing lows, but I think this would be a wobble level, and the first target would be up here at 4.8, and that then, if we were in a bigger channel, would be the kind of top of the channel for Pendle. So what I really like about what we've done this week in Pendle is how we have held above this level, this 3 and this daily 20 moving average. The moving averages have crossed bullish for the first time since, gosh, June. And so we're a little bit of sideways resistance level here, aren't we, at these previous swing highs. But if we break above it, I think we see 4 and 4.8. And I'm wrong at being bullish Pendle back underneath 3 again, and back underneath this kind of pivot level where we found support. We might, because as you know, I'm a big fan of 3-wave moves, we might end up doing a bit of this here, and it might not be ready to go yet. But that's what I'm looking for ideally. So as long as we don't break 3, I'm looking for 4 and 4.8 next in Pendle. This is not a buy place here. I'm long Pendle. I kind of got long here as we hold above this 61.8. So I'm wrong about being bullish if we close back underneath here, and I'll take a hit on this one. A couple more requests. Let's take a look at Gala. Let's see if I can find this one. This one I'm looking at because, very interestingly, for the first time we are holding above this daily 50 moving average. I'm looking for a bigger bullish move, and if we go to the daily, you can see that previously, we've got above this daily 50 and got stuck. So where would we be wrong? At the moment, if you're trading this, then you're kind of looking at these equal measured move levels. So 0.02, which is where we have an equal measured move from the low in September here, would be where this is just corrective. Otherwise, we're going to look for a retest of the highs at 0.0219 and onward and upward from there in a measured move. So if we measure from this low to this high, project it from here, they all kind of line up with this shorter time frame. So here's our first target, 0.02, and second target, 0.025. We would be wrong if we fail at 0.02. So 0.0218, 0.025. Why do I think we would do that? Because this is just one swing at the moment. I'm going to be dead wrong in this one back underneath these daily moving averages. But for now, look, when we bounced up here into the moving averages here, we were still in a downtrend. All of our daily moving averages were in a downtrend. What we can see here for the first time is we've got a bullish cross of these daily moving averages. So we're looking to push higher from here and for them to be support and keep going higher. So this is why I like it better than I thought when we saw this at the end of August. So potentially another swing higher then for Gala. I got another request for Aptos. Let's take a look at Aptos. Here we go. Okay, so Aptos. If we look at this on a weekly, whenever we've made a pretty nice double bottom retest down here of this 5 level, haven't we? We made a pretty good low here in September 2023. Are we going to make a nice low here in September 2024 for another big swing higher? That's the key question. Well, if we measure from this low to high, in fact, we really should put it from this one, then this 236 fib, is going to be the decider. And if we look left at this 236 fib, you can see support, massive support and resistance at 8.11. Lows, highs, highs, lows. huge level. So I think getting above 8.11 would say that we are in another bigger swing higher from here. So if we go down to the daily, this is another one. Nice move today above this previous swing high, and a nice move above the daily 50 moving average. We're going to be wrong about this going up though. If we get stuck, you know, at an equal measure move, when I'm really not sure, what I do is I put these shorter term fib retrace levels on, and I see, is the market looking at them, and are we going level to level to level? Because my most favorite reversal trade setup is an equal measured move back to a 50% retrace. So if I measure from this low to this high here, you can see that that's kind of where we are. Decision level. We've made an equal measured move, and this is the 50% retrace level here at 6.53. So I'm going to say that Pendle needs to close and hold and push above 6.53 on a daily basis, and then I think we could see 8.11 and our second target up here, 8.8, isn't it? So 8.11 is the key one. I think if we overshoot, it'll be the weekly 50 moving average. So a big decision level here for Pendle. Let's see if this was just a three-wave correction move, or if we can push above it at 6.53. So I'm looking at this on the hourly. Shorter term moves, I would be bearish, and I would cut my position back below this swing low in the hourly 20 moving average, because that would say a bigger correction has begun. So 6.28 is key short-term support in this one, and again, party's over underneath that level if you're looking at Aptos. Okay, one other that's been really exciting for me is Fetch. Let's see if I can find Fetch, and then here we go. This is why this one is really exciting. Again, this is another chart where if I measure from the low all the way back down here in 2022 to the high that we made in, keep messing this up, let's get it right here. So if I measure from the low that we made in 2022 to the high that we made in March 2024 when Bitcoin topped, these fib levels, fib retrace levels, have been really well respected, each one. The 236 fib, the 38.2, the 50%, the 61A, and so on. What I like about Fetch here is we've bounced, not only have we bounced from this 786 fib level, really good support and resistance, but we're back above the 61.8. So for me, as long as we hold above it, this target up here is my target at 2.17. We're at 1.5 at the moment. And we could have a little bit of a wobble here in the middle, obviously. That's where this 50% level is. But that becomes my first target. I also really like this as potentially an inverted head and shoulders pattern. It had a little bit of a slope if we would draw it like that, but head and shoulders pattern is in fact what we've got here. So there we go. Now, head and shoulders patterns fail if they are equal measured moves. So if we measure like this, here's our lovely three-wave correction. That means that potentially we could fail at the 50% level here and the 200-day moving average. But the fib patterns say that we should, on a pullback, find support and keep going higher here. So that kind of adds weight to this 1.76 level in the middle being a little bit of trouble, but I'm still keeping the 2.17 as my target for Fetch, and I kind of really like this bullish reversal pattern that we're seeing. So how are you going to trade this? Again, keep looking for pullbacks. We're getting pretty close to, I think, from the low that we made here, 5 waves up, which means that this previous swing low should hold as support. or a pullback to the hourly 20 moving average, something like that. Or if you're really not sure, sometimes I just measure the 236 fib from this low, which gives us 1.49. So nice three-wave correction back here. That would be a good trendy move, but because potentially we've done 5 waves up, we could see a bigger one. What we don't want to see, we could see a bigger one, which would mean back to this neckline and these previous highs at 1.44. The easy way, honestly, for me, the easy way is Heikin-Ashi, go to an hourly, okay, look for a nice 3 waves like we had here, or a pullback to these moving averages, look for 3 waves and look for it to turn up higher again, and that, for me, would be a long entry. So Fetch, I think, is making a really nice, good-looking bullish reversal pattern, and I might buy some more when it does that. Good luck. Let me know if there's anything you're looking at that you think's really cool, and we'll cover it.